3.3 Project Market Recognition by Dawson. What are indicators? According to Desjardins, trading indicators are mathematical calculations plotted on price charts which can help traders identify certain signals and trends. There are two categories of indicators. Leading indicators forecast signals that predict future price movements. Lagging indicators look at past trends and indicates momentum. Within the two categories of indicators are technical indicator types, which include trend indicators. Measure the direction and strength of trends. This is done by using the average price. Prices above the average are called bullish trend, while prices below the average are called a bearish trend. Momentum indicators. These indicators help identify speeds of price movements, which can signal a change in future prices. These are seen when there is a divergence between price and momentum indicators. Volatility indicators. These indicators measure the rate of price movement. This is done by using historical data and can provide useful information about the range of buying and selling that takes place in a given market and can help determine points where the market may change direction. Volume indicators are based on averaging or smoothing volume and can measure the strength of a trend and confirm trading directions. Results can be used to alert the trader about a trend, predict the direction of future prices, and confirm technical analysis suggested by other indicators. Top 10 trading indicators. Different websites have different opinions on what the best trading indicators are to use. The top 10 trading indicators are, according to Killian, are as follows. Moving average. As you can see in the visualization, the price spikes show the true price while the smooth line shows the moving average. The moving average, also called simply moving average indicators, current price and without the interference of short-term price spikes, to make predictions easier. Moving average can be calculated at different intervals, 5 days, 20 days, 100 days, or more. The bigger the interval used, the smoother the trend line will look, as can be seen in the visual, but it will also be more difficult to see aggressive moves. Exponential moving average. Stochastic oscillator. Moving average, convergence, divergence, or MACD. Relative strength index. Fibonacci retracement. Ikimoku cloud. Standard deviation. Average directional index. Bollinger Bands. The Bollinger Band indicates a range with which trades should occur. The width of the band shows volatility. The wider apart they are, the more volatile and the closer or narrower they are, the less volatile. If the price continually moves outside the parameters of the band, it can show if they are overbought or oversold. What are well tracks? When big investors go in and buy big chunks of stock when they are cheap, then sell when the price is higher, they continue to buy and sell to drive the price up and down. Is there evidence of whale tracks happening in Yelp? There are a few spots where it looks like there are whale tracks, as can be seen on the visualization. One spot in particular is of interest in the aspect because both volume and price spike up and continue to have rather large spikes continuously right after that for both until it drops off. Support resistance level. In this visual, the support levels are underlined in red, whereas the resistance levels are in orange. The levels of support and resistance are pretty obvious the further back you go. However, the more recent information isn't quite as clear. Where stock prices could be in a month. This is what the forecast looks like if nothing else major happens in the next month. Where stock prices could be in a year. What the forecast looks like if nothing else major happens within the next year. Although we can also consider that prices could go back up even further close to or where they were before the COVID-19 outbreak sometime in the next year if things will ever die down. Buy, sell, or hold. It is really difficult to say whether or not to buy at the moment because of current events. Prices have fallen drastically. Who knows when they will be back up to the level pre-COVID-19, if they ever will be. If we take into account the moving averages and how all of them are on upward trend, as well as how the Bollinger Band shows signs of less validity, and since the prices are touching the lower band continually, it shows that prices are oversold. Not to mention, it looks like there is a solid support line that has been passed since the pandemic started. So right now could be an amazing opportunity to buy.